The Federal Reserve has spoken. Interest rates are on the move again, sending ripples across the financial world. Naturally, the crypto markets are feeling the tremors. This time, the Fed has opted for a rate cut, a move that has historically been a boon for riskier assets like Bitcoin. But is this time different? The crypto world watches with bated breath, eager to see how this latest decision will play out. Will Bitcoin soar to new heights? Or are we in for a bumpy ride? Early signs point to a surge in trading volume and a spike in Bitcoin's price. It seems the markets are leaning towards optimism, at least for now. However, it's too early to declare victory for the bulls. The crypto landscape is far more complex and mature than it was during previous Fed interventions. New players, from institutional investors to everyday traders, are now part of the equation. This adds a layer of unpredictability that makes it harder to predict the long-term consequences of the Fed's decision. One thing is certain, the Fed's move has injected a fresh dose of volatility into the crypto market. This presents both opportunities and risks for investors. It's a high-stakes game of anticipation and strategy, where understanding the forces at play is crucial for success. The Fed's rate cut has ignited a firestorm of speculation in the crypto community. Will Bitcoin pump or plunge? It's the question on everyone's mind, and opinions are divided. Some analysts believe this is the catalyst for a major bull run, pointing to historical precedents and the potential for increased investment in risk-on assets. Lower interest rates often weaken the US dollar, making Bitcoin more attractive as a hedge against inflation. This narrative has gained traction in recent years, with institutional investors increasingly warming up to Bitcoin as a legitimate asset class. A weakening dollar could further accelerate this trend, driving up demand and pushing Bitcoin's price higher. However, not everyone is convinced. Some seasoned crypto observers warn of a potential bull trap. They argue that the global economic outlook remains uncertain, with geopolitical tensions and inflationary pressures still looming large. In their view, the Fed's rate cut might not be enough to offset these headwinds, and a market correction could be on the horizon. They point to the recent surge in Bitcoin's price as a sign of overexuberance, cautioning against chasing short-term gains. Instead, they advise a more cautious approach, emphasizing the importance of risk management and diversification in navigating the uncertain waters of the crypto market. The announcement of the Fed's rate cut sent shockwaves through the crypto market, triggering a flurry of activity on trading platforms worldwide. Exchanges lit up with a surge in trading volume as traders scrambled to capitalize on the news. The initial reaction was overwhelmingly bullish, with Bitcoin's price skyrocketing in the hours following the announcement. Data from major exchanges showed a significant increase in buy orders, indicating strong bullish sentiment. Traders seemed to be interpreting the Fed's move as a sign of confidence in the economy, which could translate into more investment flowing into risk assets like Bitcoin. This positive sentiment spilled over into the altcoin market as well, with many altcoins experiencing double-digit gains. However, amidst the euphoria, some cautionary signs emerged. The surge in Bitcoin's price was accompanied by a spike in volatility, a hallmark of uncertainty in the market. While this volatility presents opportunities for short-term traders, it also underscores the risks involved in navigating this rapidly evolving landscape. Moreover, it's worth noting that initial market reactions can be fleeting. The true impact of the Fed's decision will likely unfold over the coming days and weeks, as traders digest the news and adjust their strategies accordingly. It's a waiting game now, and only time will tell whether the bulls or the bears will ultimately prevail. Section 4. Rethinking your crypto portfolio, navigating the Fed's shadow. The Fed's latest move disrupts crypto portfolio management. It's no longer business as usual. Diversification now demands a keener eye. Altcoins can hedge against Bitcoin's volatility. Stablecoins provide an anchor in uncertain times. Vigilance and adaptability are crucial. Knowledge and informed decisions are key. Section 5. A look back. Echoes of past Fed decisions in the cryptosphere. The crypto market has a short but tumultuous history. It has witnessed booms and busts, often mirroring the global economy. The Federal Reserve's monetary policy significantly shapes this landscape. Past Fed decisions, especially on interest rates, ripple through the crypto market. Quantitative easing has fueled Bitcoin bull runs. Rate hikes often coincide with crypto downturns, but correlation does not equal causation. Numerous factors influence the crypto market. These include technological advancements, regulations, and geopolitical events. Understanding this context helps investors navigate current dynamics. Studying past Fed decisions offers insights for future trends, but remember, the past isn't always a reliable predictor.